A new round of talks aimed at resolving the trade war between the US and China are taking place. A senior US delegation, including Commerce Secretary Howard Lutnick, is meeting with Chinese representatives such as Vice Premier He Lifeng to resolve tensions between the world's two largest economies, which is threatening global growth. Chinese exports of rare earths, which are crucial for modern technology, as well as Beijing's access to US products, including computer chips, are expected to be high on the agenda. Now, let's remember, just last month, Washington and Beijing agreed a temporary truce over trade tariffs, but each country has since accused the other of breaching the deal. To discuss more on this, I'm joined now by Peter Cardillo, Chief Market Economist at Spartan Capital Securities. Good evening, Peter. Thank you so much for joining us once again this evening. We're seeing diplomatic efforts by both sides have ramped up after weeks of heightened trade tension, uncertainty after Trump announced those sweeping import tariffs on China and other trading partners in April. Do you think these talks are likely to make much progress in resolving disagreements and, of course, sector-specific tariffs?
Well, I think high on the agenda is going to be air products, and you know that's very critical to the United States. So I'm optimistic that there'll be some sort of a deal reached in terms of rare products. Now, as far as exports and other particulars of the ongoing deal, that I think will take some time. But I think this is positive, and I think one of the reasons why we see a fairly positive market this morning is because of these talks. So yes, I'm more optimistic that something will come about this. But again, in terms of a final deal, where do I think we're headed? I think it'll be watered down by the United States and by China, and it'll be some sort of a compromise that will likely be beneficial, whereas both countries can say, well, it's a victory, even though it's probably not the victory that the United States nor China wanted. But I think it's a step in the right direction.
Starting to hear from you, Peter, but we know that these talks will go above and beyond trade, and it really comes down to how these two countries actually run their economies. But having said that, a sticking point likely to come up today, probably already has, is China's control over rare earth supply that has become a calibrated yet assertive tool for strategic influence. Rare earths will remain a significant bargaining chip in these trade negotiations. So how do you see that playing out?
Yeah, well, the next would be obviously exports. And if you look at the macro news that came out of China, we saw that exports plunged over 35%. China could be headed for deflation. Again, sour, good news on the inflation front for them, but it can't get that good, otherwise it winds up in a deflationary economy. And so I think, as I said, we will see some progress made. As far as imports and exports are concerned, will there be an immediate deal? I don't think so. I think it's going to take time. They have to continue to negotiate. But again, it's a step in the right direction. And the first baby step, which is a crucial step for the United States, again, rare earth products, would be some sort of a victory if they can come to some concession on that.
And you were talking about the figures here, and I'm going to take our viewers through that for a minute, because Chinese export growth slowed to a 3-month low in May as US tariffs have curbed shipments, while we're also seeing factory gate deflation, like you mentioned, deepen to its worst in 2 years, obviously heaping pressure on the world's second largest economy at home and abroad. Do you foresee a change in this, and more importantly, a sentiment as these talks begin? Because you started out by talking to us about the US markets and the positive sentiment that we're seeing there, and we saw a little bit of that in Asia as well. Do you expect that to continue?
Well, I do, but we have macro data coming out this week. We have inflation numbers. And I would not be a bit surprised to see some of the tariff inflations begin to creep up in the indexes. So it's very possible that the inflation data could weigh on the bond market. Yields could go back up. In fact, they're down this morning. And also remember, we have auctions, treasury auctions this week, and that's another test for the bond market. And so a lot depends not only on these not only on the negotiations between China and the United States, but also our domestic macro indicators. And inflation is a key report in terms of the bond market and of the economy in general. We just got through with the big report of the month last Friday on employment. Yes, non-farms were a little bit more than what we were looking for and what the market was looking for. But if you look at the revisions from the previous month, that didn't make Friday's employment number all that great. And so the next hurdle will be after the inflation data, the FOMC meeting. And of course, we don't expect the Feds to lower rates this time around. But again, key wording of the statement will be taken into consideration. And so there's a lot of things going on, but basically, if everything falls into place, I think the sentiment in the market is turning for the better. And I think that if we have no surprises, that is, if we don't have any big negative surprises out of the inflation data, if we don't have much of a hawkish statement coming out of the FOMC, I think it's a good possibility that we could see the S&P 500 actually hit its old highs and make new highs. Remember that in a few weeks, we'll be at the end of the quarter, and that could mean a lot of short covering ahead of the end of the quarter if everything falls into place. And I think that for the most part, most things will fall into place.
Peter Cardillo, thank you so much for joining us all the way from New York and for giving us quite a bit of that positive sentiment, hoping that that plays out through the rest of the week as we go to see how, of course, these stocks play out and also looking at the other events lined up in America. Thanks so much for joining us.
Thank you for having me.